All right, it's 9:01, so we are going to get started here. Welcome again, everyone, to the second day of the Exempt Organizations Conference. Glad to have everyone here. It's Friday, so the end of the week is in sight here. So again, I'm going to go through some quick housekeeping for those of you who are new to a Lumsden McCormick event. This webinar is being recorded and we will provide the slide deck on our website. Give us a day or two, but I anticipate everything will be available by Tuesday. We'll send out an email to everyone who registered to attend to be able to access that information. One point I think we should note that we didn't make yesterday is recordings do not offer CPE credit. So even though the recording is on there, you won't get CPE for that. So chat and Q&A are enabled. So if you have questions for the speakers, put them in the question and answer box, and chat. If you have any questions for me, you can put them in the chat. Again, to CPE, we are offering 1 hour of CPE for this. There are 4 polling questions. If you could please answer all 4. And then there's also an evaluation at the end. If you can complete that, it will launch automatically. It opens in a new window. So make sure you look for that and don't exit out too quickly, because you may miss that evaluation. I think that's pretty much it on the housekeeping. So we're going to move on to introducing our speakers. Both are principals in the audit department at Lumsden and McCormick, Liz Krause and Jeremy Smith. Liz has expertise working with nonprofit organizations, health and human service agencies, healthcare institutions, and governmental entities. Jeremy has over 10 years of experience, and he works with school districts and governmental entities on both external and internal audit procedures. So I'm going to turn it over to Jeremy and Liz, and we'll get started. Thanks, everyone.
Thank you, Maria. So me and Liz are going to discuss a GASB update and the review of the new data collection form. We have a brief agenda here, and we'll kind of talk about these various GASB updates as well as the new Federal Audit Clearinghouse transition. So I'm going to get right into it as far as GASB 100, accounting for changes in error corrections. So the existing guidance right now is in the form of GASB 62, which was issued in 2010. So GASB did a study and found that there was substantial variations in how GASB 62 is being interpreted, and it basically undermined the financial statement comparability amongst governments. So governments and CPA firms had difficulty determining the correct type of accounting change, as well as differentiating changes from the various forms of corrections and understanding how the guidance differed for single year versus multi-year financial statements. So the good news is, if you were familiar with the old standard in 62, there wasn't too many substantial revisions to it. It was just more focused on making it easier to understand and apply. So we'll kind of get into the accounting changes. There's 3 different types, and then there's also the error correction. So accounting changes in accounting principle is this the one you're probably most familiar with. If you were one of the governments that were lucky to issue GASB 96 this past year, related to the subscription-based IT arrangements, or if you did GASB 87 and leases this year or last year, depending on your fiscal year end. And if not, you probably had some effect with that GASB 84 for fiduciary activities. So this is probably the one that you're going to be this scenario where you're going to most likely see this GASB 100. It also addresses the changes in accounting estimates. An example of that you may or not have would be the change in the useful life of your depreciable assets. An example would be, currently your vehicles are on the books for 15 years useful life, but you decided our vehicles aren't really lasting that long anymore, and they're only lasting about 7 years. And the same for IT equipment. It's probably another situation where IT doesn't last as long as it used to. So that would be an example, depending on the significance of that effect, would be a change in accounting estimates. The last one accounting change is the changes to or within a financial reporting entity. So the old standard GASB 62 only addressed the component unit added or removed. That was the only thing that was considered in changes to or within a financial reporting entity. So now they've added that plus the change between blended and discretely presented component units. They also added fund added or removed result from the movement of continuing operations. So an example of that would be your sanitation department is currently housed in your general fund, and now management's decided to move the sanitation department into its own fund, into an enterprise fund. So that would be an example where we would see a change from the movement of continuing operations. Funds reclassified between major and non-major. There's a couple scenarios in which we right now determine whether something is major versus non-major. So right now there's a qualitative option, and basically management can elect to have any fund deemed major if it deems it important to the users of the financial statements. But there's also a quantitative major measurement, and basically it states that any of our governmental funds, so your general fund, your special revenue funds, in total, if they equal at least 10% of the assets, liabilities, revenues, or expenses, and then also if you have any enterprise funds, you could add those in, and that would be 5%. So any of those funds that are over those thresholds, the 10 or 5%, would be deemed major. And then anything below would be non-major. So the new standard says if you follow the qualitative determination for making funds major, so management in the past has elected all funds major, next year they determined a couple of funds to move to non-major, this standard would apply. Now for following the quantitative threshold, in which we're just the 10% or the 5%, so an example would be in the prior year, our capital project fund had a large ongoing capital project that finished up. So in the current year, there's very or little activity in that capital project fund that moved from major in the prior to non-major in the current year. That would not result in this GASB 100 disclosure for the accounting change, because we're following the quantitative measures for reclassing between major and non-major. And then error corrections are exactly what they sound like, mathematical miscalculations or misapplication of accounting principles. So next we talk about how do we deal with each of these accounting changes and error corrections. So first, change in accounting principle. And before I get into that, GASB 100 requires that the cumulative amount of statements be displayed on, misstatements be displayed on the face of the financial statement. So you want to show what the beginning reported balances was, and then what the adjusted or the restated balances were for the retroactive reporting method. So previously under GASB 62, it was actually acceptable to only label the beginning balances as restated or adjusted without the actual amounts in which they were changed. So you would have to look at your prior year financial statements to determine that effect. So back to change in accounting principle, this is going to be retroactive. So you're going to report the earliest period presented. So most of our governments, we kind of see 2 years. So if that prior year data would have to be restated for the effect of this accounting change. So you do see situations, because it becomes difficult to calculate those amounts, where we would see just a single year financial statement. So there is options there. Now, as far as footnote disclosures, you need to disclose the reason for the change, and then once again, the effects that it had on your fund balance or net position. Then change in counting estimates are prospective reporting, so we don't have any restatement. And then you need to, so it's just we're correcting going forward. So then once again, disclose the reason for the change, and then the individual line items that are being affected by on the financial statements. And also for a change to or within the entity, we would show the adjustment to the beginning net position and fund balance. And then error corrections, those are retroactive in a way kind of similar to what we do with a change in accounting principle. So we would report the earliest period presented and restate those, and then the effects. And then the footnote disclosure, the reason for change, the effects on the beginning net position and fund balance, and basically the cumulative effect on this error correction. And then finally, RSI and SI. So the prior standard, GASB 62, did not address actually required supplementary information at all. Now, most of you do have required supplementary information just due to the New York State pension retirement systems, as well as some of you may have GASB 75, in which you have other post-employment benefits. So you probably do have some of these required supplementary schedules. Now, the old standard didn't address them because GASB 68 didn't come out to 2015. So the standard kind of predated before we started having required supplementary information. So the general rule is if you had to change it in the face of the financial statement, so either your single year or the multi-year, the 2 years that we generally show, you would change those in the back schedules as well. So for periods that are earlier than those presented, so remember the pension requirement and the OPEB requirement we're required to show 10 years of data. So we would not change those unless they were for error corrections. So then if there are error corrections, you should change any of the periods presented in the RSI as well. And this standard is effective for fiscal years beginning after June 15, 2023. So it's coming up pretty soon. Now we got our first polling question.
I think the Christmas specials, Rudolph the Red-Nosed Reindeer, has already been on TV, so that the networks do it a lot earlier than they used to. All right, we'll just give it another 30 seconds. Getting full participation on these questions, which is great. Trying to have a little fun this morning, given that it's a Friday, right, guys?
Yes, exactly.
Right, so I'm gonna give everyone another second and then we'll close the poll. Okay, and I'll share the results. So does everyone see that? So 9 is the correct answer. Santa has 9 reindeer. All right.
Okay, thank you. So next we're going to talk about GASB 101, compensated absences. So the existing guidance is GASB 16, which was actually issued in 1992. So this one's a pretty old standard. So the current standard, GASB 16, provides guidance to the specific type of leave and that has become outdated. It only applied to sick, vacation, and sabbatical leave. So, currently employers provide many types of leave that weren't even contemplated back when GASB 16 was originally issued. An example right off the top of my head is PTO. That wasn't really prevalent back then, but has now become a more popular form of absence now. So they also found that there were many differences in the way these absences were being handled by the individual government. So the goal of this whole standard was to kind of create a more consistent model for accounting compensated absences that, applies to all types of compensated absence arrangements. So this one is going to be effective for years beginning after December 15th, 2023. So if you have a calendar year end, this is going to be ready for your 2024 audit. So compensated absences are defined by this in the new standard are some cash payments when that leave is used for time off. Highlighted in blue because we'll get into that in the next couple slides, but that's going to be one of the more significant changes that we're going to have to deal with. Now, other cash payments, such as for unused leave upon termination employment, I think that's what generally people think of when we think of a compensated absence or sick time payout at time of retirement. Another one that's kind of common that wasn't in the existing guidance as well is non-cash settlements, such as the conversion to defined benefit and post-employment benefits. I think many of the governments have some type of language in their employment contracts that state that their sick time will be converted into some type of New York State retirement benefit. And then it does specify what are compensated absences, which type of leaves. So now it includes vacation, sick, PTO, holidays, parental bereavement, and certain sabbatical. As mentioned before, the old standard only included vacation, sick, and sabbatical. So some other types of leave. So leave that is dependent on the occurrence of events. So this family, the military, or jury duty should not be recognized as a liability for the unused leave time. There is an exception unless that leave had begun at the end of the reporting period. So an example would be if we have our calendar year end, so 12/31, and someone went on to family or parental leave December 1st, and that was for 3 months, we would accrue for that January and February because the leave began before our end of our reporting period. So if that leave didn't start until sometime in 2024, we would not accrue for it. Unlimited PTO and holiday, we do not accrue for. So now holiday, we won't accrue for if it's required to be taken on a specific date. So this past Thanksgiving is required by the government, July 4th, Christmas, those types of things. Now, if they have floating holidays where the employee has the use at their discretion and they can take it whenever they want, then that would be recognized as a liability. But if the holiday leaves at a specific date, do not record it. Some of you deal with sabbatical leave. So basically the general rule is for sabbatical, it is a compensated absence if there's not some form of work requirement related to it. If there is some type of work requirement or duties performed, an example is if you're a teacher that you're required to do some type of research, then that is not a compensated absence. So then leave that should be recognized as a liability has to meet all three of these criteria. So the leave is attributed to services already rendered and the leave accumulates. Very similar to the existing guidance. So not much of a change there. This is where we start seeing some of the changes in the new guidance. So the leave that is more likely than not, so more than 50% to be used for time off or paid in cash or settled through non-cash means. That's the biggest change. So the new standard, the threshold for future payment and liability decreased from probable likely, which was in GASB 16. There wasn't an official percentage, but I think amongst a lot of auditors that general rule is around that 80% threshold. To now it's more likely than not, or likelihood of 50% higher. So they lowered the standard at which to recognize a liability. So we're going to see just naturally from that an increase in our compensated absences under 101. The other big difference is GASB 16 was more of a rules-based approach, and GASB 101 is more of a conceptual framework approach. So GASB 16, we had two options of accruing for sick time. We had a vesting and a termination payment method, both which required the government to accrue sick time that would be paid in the form of a termination payment. So you weren't allowed to accrue time in the past for use of sick time already earned. So under 101, you're going to accumulate sick time the same manner you would any other type of compensated absence. So it's going to require the government to accrue time that has accumulated and likely to be used, even if that employee will never be eligible for that termination payment. So that's one of the biggest changes that we'll see. Another thing is it did this similar to the current guidance. The rate of pay as of the balance sheet date should be calculated using liability. That's the same. So whatever that person's pay as of, if you have a 12/31 year end, you would use as well, unless there's an exception like you get $50 a day for sick time, you would use that as well. So really the key here is governments are going to have to make an assessment to support the percentage. So you're gonna have to just basically have documentation of how we come up with this percentage. So review employment policies, look at some historical information about the leave usage. you probably can get that data right out of either your accounting software or through your third party, just on how much sick time is being used. There is an example on the next slide. I'm not going to go over it, and because just every government has specific language in their each of their employment contracts, and it just becomes hard to calculate. But I think the point is, and the GASB knew this when they were issuing the new standard, that we're probably going to see an increase in our compensated absences. So just keep that in mind when you're reviewing that calculation, and don't forget your auditors are always there to assist you and any guidance, any questions that you have on that. So next, also part of the new standard. So leave is more likely not to be settled through conversion to defined benefit, should not be recognized as a liability for compensated absences. The reason is that it's already being included in your GASB 68 or your GASB 75. Compensated absences are paid via distribution in individual account. So that might be a 403B or an IRA, or towards health insurance premiums. I know we have a lot of governments that use that sick time balance has to be used to pay off the retiree health insurance balance until that sick time balance that accumulated is depleted. So those should be recognized as a compensated absence liability. And then compensated absence should be recognized liabilities on your government-wide financial statements. So once again, this is your W fund if you have your ST3 or your AFR or AUD. So a couple things to remember. Now, it was kind of implied in the old standard in GASB 16 regarding salary-related payments. But the new standard does explicitly state that you should include those. So include part of your sick time, vacation time balances, the FICA, Social Security, Medicare, as well as any defined contributions or defined benefit related to the employer amounts. Now, those can get a little tricky depending on how your defined contribution or defined benefit is calculated, just due to I think of a defined contribution. Sometimes the employer has 3%, and then they give an X% over based off what the employee contributes. So these can get a little bit more difficult, and as well as the TRS, ERS, and PFRS. So on the next slide, I'm not going to get into too much detail, but we did get some guidance from the NISLers as well as the New York State Teacher Retirement System, which basically states that payments related to the termination payments related to sick time are not included in the employer's contribution. So we're not going to have any effect on that. So, but with the new guidance, the use of sick time, you should probably consider having some type of accrual based off the TRS, ERS, and PFRS. So it is something that's going to get a little tricky. Those calculations could probably be very difficult, but once again, the auditors are available to help you assist in that. This standard is allowed to be early adopted, so I think it's a good job to just start thinking about it right now, just to make sure we have a good handle on it. And just another reminder, this also didn't change from the existing guidance, but you can recognize some of this current portion of compensated absences. So if the person obligated to leave, so basically they put in their retirement notice, and we're expected to be paid with our current resources, then we should accrue it. So an example is at 6:30, we had a teacher that announced that they were going to retire on February 1st, and they were going to retire at 6:30. We would probably accrue that, and it's going to get paid out probably the first pay in July. We would probably accrue that. I mean, it would also depend on when did we budget for it. So in that example, you're getting ready for your April budget for next year. You found out this person was going to announce retirement, so you put in next year's budget. We could probably wait till next year to put that in there, but I know some governments have just a general separation payments budget line, in which you might be able to make that argument that we've already prepared for this and planned for it in the current fiscal year. So the only other thing is, if you do recognize it in the current year, You should also make sure that you remove it from this government-wide financial statement compensated absence. You don't want to double book it. And here's just a slide. This is just guidance from New York State, but basically, yes, it just states that those termination payment methods are not going to be included or affect the employer contribution. Okay, next polling question.
I think everybody knows this answer, but maybe not. I think it's going to be a busy weekend shopping since there's no Bills game. So everyone can get out there and get their gifts, right, Liz?
Yeah, that's my plan.
Yeah. Okay, I'm just going to give it another second, everyone. All right, I'm going to end the poll here. And of course, the answer is 17. Josh Allen, where is number 17? Okay, take it away.
All right, so next we're going to get into some just new implementation or latest implementation guidance and some upcoming technical plan items. So the first thing is just the latest implementation guide number 2023-1. It was issued in June of 23. So this past summer. It consists of 10 new Q&As and 1 revised Q&A. So for 4.1 through 4.9 and 5.1, those are with leases and the subscription-based information technology arrangements. Under the leases, I won't go into detail in each one, but 4.1 through 4.3 relate to short-term leases. 4.4 relates to rent holidays and prepaids. 4.5 and 4.6 relate to various lease topics not covered by prior to. And then 4.7 through 4.9 relate to subscription-based technology arrangements. And then 4.10 relate to accounting changes. Those are effective for fiscal years beginning after June 15th, 2023. So for example, that would be your July 1st, 23 beginning years, or the coming year this year in January. You'll have to start considering these for implementation. And then with 5.1, it was a revised Q&A on leases. So the cancelable period had previously been used in error, referring to a period during which only one party had an unconditional right to terminate a lease. So they did update that Q&A from the previous update guidance. And then we have accounting changes and error corrections topic, a Q&A 4.1. Like I said, that's for the accounting changes. That's what Jeremy had just discussed with GASB 100. This change is effective for years beginning after June 15th, 2023, regardless of if you've implemented or not implemented GASB 100. And with this one, it's just for these Q&As, early implementation, as we always say, is encouraged, depending on when you did implement the standards. The next slide is covering the disclosure and classification of certain capital assets. This is an exposure draft. The draft was issued September of 23. Comments are due early January 24, so that is upcoming. But some background on this topic. Really what came into play here was just the need for a wider variety of capital assets, especially intangible assets. So your lease assets, subscription assets. Really, there had been no requirement for separate disclosure of intangible assets or assets held for sale. So users really did express the need to be able to identify the differentiation between these assets from what is already currently disclosed. So within the exposure draft, there's no change to proposed measurement and display of capital assets within the statements, but it does require some additional separation of these assets. So for intangibles, disclosing the major classification of the intangible, whether it be the subscription asset, the right to use intangible, outside of just what's the right to use versus the government owned intangible assets. So breaking those out and differentiating the differences within the footnotes. And then within the held for sale assets, if a capital asset has, if for instance, the government has decided to sell the asset and there's a probable likelihood that it is going to be sold, then the asset should be considered to be broken out as an asset held for sale. So professional judgment is necessary, obviously, to determine if this asset is held for sale and appropriately considered for disclosure. And we also have to remember, just in general, that the asset may or may not actually be in service at the reporting date, but we still have to be disclosing this information. So proposed to become effective for years beginning after June 15th, 2025, and then all reporting periods thereafter. If practicable, obviously, we would like to see retroactive application, and the transition of this topic would be proposed in line with GASB 100 for that change in accounting principle. On the next slide, we have the financial reporting model improvements. This really came from the board proposing improvements to different financial reporting models previously implemented. There was a laundry list of things that they wanted to propose. So that included changes to the MD&A, the measurement focus and basis of accounting for governmental funds, classification of operating and not operating items in proprietary funds, presentation of the proprietary funds, statements of revenue, expenses, and changes in that position. There was also budgetary comparisons, unusual events, and then just major component unit presentations. One other thing that they did have on this list was the format of governmental fund financial statements. This was getting a little cumbersome. So in June of this year, the board decided to remove this from the scope of the project. Realistically, there was just too many roadblocks, inconsistencies, and just a significant number of exceptions that were coming up as they tried to simplify the format. So therefore, they just determined that the cost didn't justify the benefit. So they did take that out of the proposal, and it probably will be brought up, they say, in later discussions down the line, as they kind of have more time to focus on how to make it consistent and more efficient and effective. But until then, that is off the docket for now. The next one is revenue and expense recognition. So here they propose just a comprehensive model for the recognition of revenues and expenses. So they want to expand areas where there's no guidance for expenses, expand areas where there's limited guidance for certain revenues. They want to be able to provide guidance for exchange and non-exchange transactions and consider performance obligation recognition. And they also just want to kind of identify just practical issues and challenges that they've identified in statement 33, and then some conceptual framework items for anything identified after that statement. So this is set for an exposure draft in about a year from now, so early 2025. The next one is going concern, uncertainties, and severe financial stress. So this really came into play after they kind of reviewed the existing standards. There's not much on the GASB side of things relating to going concern and financial stress. Just typically, as I have here, governments really aren't going to go out of business. So there hasn't been as much concern in this aspect. But the board really did want to identify just consistent application, define what going concern is for a government, define what severe financial stress is, how do those two definitions differ, what relevant information should the government be disclosing when there is instances of financial stress. And then, obviously, when they are considering these things, evaluating all the factors that indicate the likelihood of dissolution if applicable, and then determine, what factors that will be put in place to kind of rectify the situation just overall. So this is still in preliminary views, and that is expected in late 2024 with an exposure draft for potentially mid-2026. Infrastructure assets. Here the board wanted to address issues related to just the accounting and financial reporting of these assets. It came into play just after, stakeholders and users of the information didn't think that they had sufficient information within the financial statement. So various questions arose. How should infrastructure assets be recognized and measured in the financial statements? Should the option use of the modified approach continue to be allowed for these assets? What additional information related to the maintenance and preservation of infrastructure assets? What should be presented in the financial statements? And how would that method be communicated to provide the accurate information? So again, this is really just in preliminary discussion. They expect to have some guidance out for everybody in mid-2024 with an exposure draft in early 2026. All right, next we have certain disclosure risks. So again, here it really was brought on just by the users of the financial statements and how GASB considers the disclosure of these different disclosure risks. So what are the vulnerabilities due to certain concentrations or certain constraints? So concentrations, some examples are employers, industries, workforce covered by collective bargaining agreements, suppliers of labor, material, or services. And then constraints would be like limitations on raising revenue, limitations on spending, limitations on incurrence of debt. Really, disclosures would only be required for when all certain criteria were met. So concentration or constraint is known to the government prior to the financial statements being issued. The concentration or constraint makes the government vulnerable to the risk of a substantial impact, and an event or events associated with the concentration or constraint that would cause the substantial impact either has occurred or is more likely to begin to occur within the next 12 months after the financial statements have been issued. So all those factors would have to be apparent for the disclosure to be required. And then for each constraint or concentration that meet the disclosure, they would have to provide like substantial detail just so that the user understands what is happening, the nature of the circumstance, and the vulnerability of the government's risk to the impact. So here we have an exposure draft that was already issued, and this is really probably the next one to actually come into play, and the statement's considered for this month actually. So we should be expecting that sometime before the end of the year. The next one is subsequent events, and this is really just not too much so far, and not of substantial substance, but really just what is useful to the financial statements, what's useful to the user, and just being more consistent with the application of what we put in our subsequent event disclosures. So they've added it really to the agenda for more robust discussion this past summer. So we'll eventually be seeing more information coming down the pike on this one. All right, so polling question 3, how many championships have the Buffalo Bandits won?
Sure, many of you have been to those games. Those games are crazy wild. Those
Mhm.
Bandits games are a lot of fun.
They are.
Give it another second here. All right, I'm gonna end the poll and share the results.
And I believe here the answer is actually C, 5.
Yes. All right, moving ahead.
All right, next we will get into the new FAC. It has transitioned from census to GSA. So just a little background on the Federal Audit Clearinghouse. Currently, it's triggered when an entity spends more than $750,000 in federal grant funds in a given year. So this system is really just a place where grantors and grantees submit information, the audit findings, the data involved in the single audit. So it's really just a single point of entry for all the users and recipients of grant funds. Here we have over 40 such audits carried. Oh, sorry, go back a slide. I'm not sorry. We have over 40,000 such audits carried out each year. This is visible to many agency and customers, tens of thousands of public users. But one thing that just did come out back in September from the OMB, just a little, some exciting news, I guess, in the audit world, is just the discussion to increase the threshold. So that is kind of in discussions with OMB. They did submit proposed guidance to the Federal Register, like I said, back in September. There's several objectives, but one of the objectives is to increase that threshold up to $1 million. So this is good news that will, maybe impact some of our clients or you as clients with the need to have a single audit performed. But in the grand scheme of things, it really doesn't change the audit requirement for most of the people that have single audits, because many are already above the $1 million, even at this point. So, but it is exciting. Just thought I would share that little piece of news. So, with the OMB, proposing this guidance, the likelihood of it actually going through is pretty likely. So next we have just the overall transition and kind of how it came into play. About 2 years ago, OMB directed GSA just to become more of a designated agency for the FAC, just to address some issues. We did have a lot of funds coming through with COVID and all the CARES, CRISA, and ARP funds that came through. So they did kind of launch some modernization within the GSA to kind of streamline things and make the submission more effective and efficient. Here on the next slide, we have the extensions provided. So really just knowing, this is kind of a snippet from the GAQC, just about kind of like where you are in the process. So if you have already entered data collection forms for 2023, you can use the current workbooks. 2022 and prior, you have to now use the current workbooks. If you had an unfinished data collection form in census, you need to start over with FAC now. So just some things to consider. But with just the overall extensions of these, just a reminder that for the fiscal year ends between January 1st and September 30th of 2023, they've waived the 30-day requirement to have the data collection form submitted. So as long as you have them submitted within 9 months of the fiscal year end, you are still fine. And then when it comes to historical submissions, I know myself and many others like to kind of see what has been submitted just for, more historical information and research. So you can still visit the old looking Federal Audit Clearinghouse. So they have all the historical information in there for the audits of 2016 through 2022. So that has a new web address technically, but just doing some searching within Google, you should be able to find where this is. And it's still the same process for searching for single audits that you were previously used to. But just some information just regarding the GSA. So it really has been in existence and used for many other purposes, but now they're kind of, again, bringing all the information for, government agencies into one stop shop. So it really helps to manage and support the mission. And I just put a Google link here, or sorry, a web address link here, just to be able to get to that site in general for any inquiries and to start your submission for your data collection form. On the next slide, we have a distinct change between what was previously needed. So now all entities will need a UEI, or a unique entity identifier. This was previously the DUNS number that has been removed. So now this identifier is a 12-character ID, and it's assigned to each entity by SAM.gov. So if you haven't already figured out what your UEI is, you should start to look for that, so you can find your existing one on SAM.gov. Or if you are unable to locate your number, you might need to contact them and register for one, because it will be needed in order to submit the data collection form. And then in order to access SAM.gov or FAC for submission, everyone, and that does include the auditor and the auditee, and anyone involved in the submission process, they will have to log in through login.gov, and that is going to be your login web page to get to SAM.gov and to get to FAC.gov. So this is a must in the steps in order to submit. And then once you're in to the web page, this will be kind of your status page. So you will be able to see the current status of audits, where they are in the process, what you've submitted, and you will be able to then create also a new submission here as well. There's submission eligibility, so it walks through just the criteria and what you will need in order to be eligible to submit. So it talks about the threshold, what type of entity you are, and just other various information regarding the situation and the amounts. Auditee information. So here again, you'll need that UEI in order to proceed. So this will be a stopping point if you don't have that. On the next slide, we have your audit access. So who's your auditor, who's your auditee, the certifying officials, all the data will be entered here. Just a reminder that you must enter all the information here. You can't edit after proceeding. So just make sure that you do have all the information, all the addresses, and all the individuals in the process before you do move on to the next step. There will be various slides that I'll just kind of go through, but you can reference once we send out handouts for your own information, just as far as what some scenarios are and what the statuses are. So I won't go into detail on those slides. Key process changes. So this is really just more inform, not so much substance. So just like how you're entering things, uploading PDFs, and just how you're entering your federal awards, findings, corrective action plans, they're all going to be within workbooks now, and each workbook will have to be uploaded. Other information, general and audit information. So just the audit type, period of the audit or the fiscal period that you are, the auditee and auditor information, the information in detail for the financial statements and the federal programs that were audited. You will have a submission checklist that you can readily view, just to make sure that you are kind of staying within the process and checking all the boxes. So it does help you to understand what you have done and what you still need to do. Within the upload of the single audit, just remember that there has to be certain formatting requirements. So you have to get rid of passwords. You have to convert potentially an electronic document so that it's text searchable. It can't be encrypted. And you have to make sure that you remove all PII. And that really just includes, but isn't limited to, social security numbers, account numbers, any vehicle IDs, any canceled checks, student names, birth dates, personal addresses. So those things do need to be removed. And then if we keep scrolling, we get to the audit workbooks, and here's just a list of all the audit workbooks that you will or have to, may have to complete. So workbooks 6 through 8, These are really only necessary if you have multiple UEIs or multiple auditors doing the audit work, or multiple single audits that cover multiple EINs. So those are going to be optional, but 1 through 5 are going to be required. And when you go into the software, you're going to be able to download each workbook, and you're going to be able to find instructions for how to complete each individual page. So they will give you very explicit instructions on how to populate this information. If we keep scrolling down to finalizing, we have just the last few steps in the process after all the information has been input. You have your tribal data release, if that is applicable. We have your pre-certification validation, so that confirms and cross-validates all the data to make sure everything is consistent. If there's errors, it'll direct you to what workbooks are impacted. And then you can re-upload and revise your workbooks if there is errors. And then once you lock for certification, you can unlock as well. But if you do unlock, it'll require you to revalidate and relock. So just keep that in mind. And then when you do certify, the auditor certifies first, the auditee certifies after. So they're going to be last. And you can recertify and re-upload for more changes, but it kind of starts you back at the beginning once you do so. And then when the auditor certification checklist comes to play, it just shows kind of a list of all the a list of acknowledgements that will be needed to confirm the reports do meet all the requirements. So then we have another slide with just some finalizing scenarios and solutions, and just some other pointers that I have on the next slide, really. Just some things that I thought were interesting, or kind of reiterating what I previously said. In the prior steps, we would get an email, the auditor, the auditee, for every step in the certification process. That is not happening anymore, so just something to keep in mind. Again, the UEI is important, just making sure you have the right one entered. So just, various things in here just to keep in mind. So that is it. So I think we have our last polling question. So what year was the Buffalo Sabres founded?
We obviously had a theme to the questions today. Well, except for the reindeer one.
Right, a little holiday here.
Yes, someone did ask, the 9 reindeer do include Rudolph. So just as an FYI. So
it wasn't a trick question.
yeah. So we'll give that another second. You guys can take a quick break. I'll wrap this up now, Liz. Is this the last slide, Liz?
This is the last slide.
Okay, so I'll let the poll go for another second. We have a few more. Okay.
And C is correct, 1970.
Yep, the Sabres were founded in 1970. So just a reminder to everyone, I did notice that some people have signed in with just a first name or initials. If you could please remember to sign in with your full name, that helps us to match you up as attending, as well as for the CPE. So that's important. And we don't have time for questions, but if you do have any questions, you can, there's none that have appeared thus far. So if anyone does have any questions, you can go to the link that I shared with the handouts to get contact information for both Liz and Jeremy, and reach out with any questions that you have to them. There's their email, so you can always follow up after. So again, thanks for attending, and we'll see you guys soon. Have a great weekend. We'll see you at the next session, everyone. Thank you.
Thanks.
Thank you.
Bye.